Hang Seng is up almost 0.25%. We've seen a positive move coming in across the Asian market.
We are 100% compliant and respect FDI laws.
We should not break below the 23,179 number.
I believe some kind of optimism will play out in today's trading session, and maybe we see a buy on dips market.
Companies have to take a price hike anywhere between 8 to 10% in order to pass on the entire cost to the customers.
23,400 plus, but dithering.
Been holding Zomato since 50 rupees in our model portfolio, and we still like this space.
When they see both upside risk to the estimates as well as multiples for the company. So after the cuts that we saw yesterday, today there's a gap up opening that we saw, and actually we built onto that.
The company has come out with positive growth plans for up till 2030.
Deep shade of green that we are looking at today. 350 points higher on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far. It has been a good day with the market posting a 2% rally on the Nifty. I don't recall the last time we had a 2% plus move on the Nifty. I think you've got to go back at least 2 weeks, maybe more. Lots to talk about, and it doesn't look like it's giving up gains or is the mood of giving up any gains. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good afternoon.
And why not, right? The Bulls haven't had this opportunity in such a long time. And I'll tell you what, I had a feeling. When I saw Nigel's red tie and, ironically my red attire as well, I think red is a good color, as they say, shubh color. It turned into green for the market.
Today, I think in the first 30 seconds of our morning hello, we said that there are plenty of cues stacked up against the Bulls. But on these sort of days, there is a surprise that's in store. So pretty good to see some green on the screen, maybe factoring in some part of a better than expected performance from the BJP in the state elections outcome. But guys, besides the markets, I'm quite keyed up. You know why? Because India is fighting back. We playing against Australia, the test match, and earlier this morning I was quite depressed actually.
I didn't know whether it was a test match or a T20, no, the rate at which it was going.
Got knocked off at 150 runs, and just take a look at the boys come in there, bending their backs, that lovely Perth pitch. They're putting in a good effort. 38 runs for 4 wickets. I believe my boys have got this. 38 for 5.
He's
38 for 5. There's one more gone. My director Shreya's...
Where is the feed?
Shreya's telling me. My director told me there's another wicket down, so I'm even more pumped up now.
All right. Well, I think you'll get the Nifty commentary and the cricket commentary here, so all rolled into one. But it's a good day. And, one of those days where it looked like the market is going to have a good session, despite, of course, the dollar being above the 107, the dollar index, that is, it just looked like, it had the makings of a good day. And it's turning out to be actually a pretty trending kind of a day, except the initial hiccup that we had. But even then, after the market sold off from being up 150 early on in the first 30 minutes, there were those 60, 70 points, even at the day's lowest point. And then, of course, it's just been trending one way, and there's a 2% plus pop on the Nifty. Just 2 or 3 points before we go any further. So it is, first up, let's just look at the levels here. The first big test for both the Nifty and the hourly averages are all gone, of course. They've been taken out. And we'll most likely close above it. The 20-day for both the Nifty and the Bank Nifty come into focus. For the Nifty, that is 24,030. It's about 200 points away from where we are. For the Nifty Bank, that test is 51,298. And again, it's much closer percentage-wise for the Nifty Bank as far as the distance to 20-day is concerned. So these are the two levels. If you're able to, in the next couple of sessions, provided tomorrow the election results are to the market's liking, it's possible that you have a little bit more steam out here before, doubts start to emerge once again. Now, PSU banks, real estate, IT, sectorally, these are the three areas where you're seeing maximum gains. PSU Bank Index is up 3.5%. Mid-caps and small caps, they are actually lagging a little bit. It's not as if they're down or anything. 1% gains, 1% plus gains. But it's really Nifty and the Nifty by large caps, essentially, which are really firing out there. Surabhi.
Absolutely. I mean, it's not a bad screen at all, considering the kind of gainers we're seeing, because today you can't complain in terms of sectors. It's a very wide move, cutting across sectoral lines, IT, PSU stocks, PSU banks, non-PSU banks, literally even consumer for that matter. Even the FMCG index is actually nicely in green territory. So nothing to complain. In terms of stock-specific action, just to take a few names, if you're talking real estate, then stocks like Godrej Properties, Sobha, they're having a pretty good run. Info Edge has been reacting very well to that Goldman Sachs report note, 6.5% up on Info Edge. So lots of gainers out there. A stock like NLC India, which won a coal block in the recent auctions that just got concluded. That's up after 8%. It's up another 4% today. And okay, let's also wrap it up with the Adani group of stocks. It's not bad for the Adani group because a lot of them have recovered from the lower levels of the morning. Down about 0.5%, 1%. The one that's still deep in negative territory is actually Adani Green. That's still sort of down 7-8%. But otherwise, it's a good-looking screen, and the big boys. They are the ones that are really leading from the front today.
Talking about the big boys, just take a look at the tech index. The IT index is up more than 2%.
Yeah.
It's got a lot going for it. And if you pull up in this month, we're talking about the Nifty being down 1.5%, 2%. It was down 2.5% at the start of today's trading session. Just take a look at the divergence. That's the last 1 month chart. The Nifty IT index is doing an outperformance to the tune of close to around 7% in comparison to what the Nifty has done. Because the Nifty is down close to 4%, the IT index is up. And the few factors that are playing out here, the first couple of quarters haven't been bad. The second half of the year is expected to be better. And Trump is good for tech. And that's why the bulls are sticking on to tech. The growth rate should pick up from year on. You'll have the rupee, the dollar index that will be stronger, which means the rupee will be relatively weaker. And that's been good for them, net. That's one. The other factor is there's going to be tax cuts that are likely to come about in the United States. It'll help spending and spending on services. We have been seeing a lot of spending on equipment. So put all that together, just pull up that chart once again. If you pull up actually a 1 year chart, you'll see that they were moving pretty much okay, and then in the last 1 month or so, suddenly the IT space, the Nifty IT index, that's taken off. It's a divergent move in comparison to what the Nifty has done. Just if you could, pull up the last 1 year chart or so, IT index has been the relative outperformer in the last 45 days or thereabouts. Well, let's get in Mitesh Thakur, who joins us. Hi, Mitesh. What are you making of today's bounce? Clearly, the markets are sensing that the BJP is going to come out on top in the state elections, which will be great news from an equity market perspective. Your view, what do you do right now? It's tricky, right? You've got a good bounce, take some money off the table or ride it. I'll tell you why. The Nifty Bank went to that 20-day MA intraday, and then it quickly pulled back a quick 200 points or thereabouts. Mitesh, I think you'll have to unmute yourself. We'll want to hear you.
Sorry. So I think earlier in the day I was talking about the fact that one should be leaning towards banks and financials, and I think the financials were the sector which kind of started the movement on the upside. Having said that, I think also what has happened post that is that the IT stocks have joined the up move. Now, for the time being, the Nifty is very close to the supply pivot of 23,950-24,000 zone. So, maybe you will see another 80-90 points and you might see some stoppage over there. But the good thing is that most of the indicators have started turning on the upside for the Nifty and the Nifty Bank, which means that despite the fact that there could be some volatility at slightly higher levels, I think the bounce back should extend early into the next week. So I would say positive in that sense. Right now, also, I have buy calls on Infosys. Infy is something which has managed to get past the earlier swing high of 1872 odd levels. So just keep a stop around that. Look for a target of around 1945, 1950 on the upside. And the second call which I have is a buy on Maruti, which made a false breakdown on the downside is recovering. So that's a buy with a stop at about 10,900 for targets of 11,500.
Okay. All right, got that. Mitesh, thanks very much. We'll come back to you for some more strategies in a bit. Let's get the conversation going and look at some of the interesting stocks. Like I pointed out earlier as well, Info Edge is really taking note of some commentary that's come in from Goldman Sachs. Now, Goldman Sachs is suddenly gone extremely bullish on the stock. From a sell, it's an outright buy. And they have they've also increased their price target by a fair bit. Let's go across to Vamakshi to understand what's caused this change in the point of view. Vamakshi, tell us more.
Whereas would be, yes, it's a massive upgrade coming in from Goldman Sachs for Info Edge. They've gone ahead and changed their rating on this counter from sell to buy. They've also upped their target price to 8,600 from 5,700 rupees per share earlier. They say that the demand environment for India's IT sector is looking much better, and resultantly they're expecting the recruitment segment's revenue to grow at a much faster pace of 16% CAGR from FY25 to 28 as compared to a slower pace of almost 8% that they're expecting from FY23 to 25. As far as their other segments are concerned, they're expecting 20% plus robust growth in 99 acres, and out here, in fact, they believe that because of scale as well as stable competitive intensity, 99 acres is expected to break even in calendar year 25. They're also bullish on Zomato, which accounts for nearly 1/3 of their market cap, and they see upside risk to both their estimates as well as multiples for the company. So given that rationale, Goldman Sachs is quite bullish on Info Edge, and resultantly the stock is trading higher.
Okay, all right, got it. Thanks very much for that, Vamakshi. Let's get to our first guest on the show. Prakash Diwan is joining us as always. It's a Friday afternoon. Prakash, good to have you back on. That's a striking shade of blue, but no blues on the street today because the bulls are going with green, right? Okay, let's start with Info Edge. What do you think of the stock? The story is well known, but the question is how much more on the price? And do you expect, apart from their investments in a lot of these new age businesses, do you think the base business itself, Naukri and Jeevan Sathi, etc., do you see better times ahead there too?
Good afternoon, Surbhi. So yeah, thanks for adding that red to the green screen while I did my bit with the blue. But I think Info Edge is a stock that keeps getting revisited in terms of its potential to kind of continue growing and at some optionality level disrupt the newer markets or segments that it's trying to get into. My sense is the bullishness just comes to mind because you have the base business of Naukri and Zomato, both, and of course Blinkit along with that Zomato piece. Which imagine if everything starts coming together in terms of the convergence of firing on all cylinders, the ability for this company to invest into areas which have still not grown, given the deepness of its resources that will come about, is what is very attractive. But whether the stock gets into a new range in terms of pricing, I think it's a very difficult. It's still like a startup aggregator. I would believe that it will behave in a bit of a volatile, erratic way for some time. But you would buy this on dips, not on days like this when somebody's turned out with a report and the market's celebrating that. But you will get entry levels, but keep it for the long term, and it will keep on surprising you with these kind of sporadic moves once in a while. But yes, the overall direction is extremely positive, so there's no doubt about that.
Okay, all right. Prakash, stay with us. The other stock we want to discuss is Praj Industries. They put out a release earlier today, and they say that they are going to be focusing on various plans. And the bottom line is the revenues are going to triple by 2030. Vamakshi joins us to fill us in with those details. And then we go back to Prakash for a call. Vamakshi, take it away.
Well, absolutely. For Praj, several new opportunities are emerging. The company says that it is eyeing opportunities in sectors like sustainable aviation fuel, biopolymers, as well as energy transition and climate actions. Overall, they're pegging the global investments to be quite large as well. The energy majors are expected to invest somewhere around 25 lakh crores by 2030 in the clean energy sector. Traditional oil and gas investments are also likely to continue to the tune of almost 21 lakh crores in the next 10 years. But what does all of this mean for Praj? The company says that they see significant demand for modularization solutions for setting up plants, and in order to cater to this significant demand, they're setting up a plant in Mangalore, Karnataka with an investment of almost 400 crores, and they're expecting to generate a revenue anywhere between 2,000 to 2,500 crores per annum at optimum utilization from this particular plant. They also say that the opportunity in sustainable aviation fuel is also quite large, given that India has set the target of blending 1% by 2027 and 2% by 2028. The European Union as well as USA too have very ambitious targets of almost 6% and 10% respectively. Additionally, given the kind of growth and the demand that is coming through for Praj Industries, they're expecting revenue for the company to triple by 2030 from 3,400 crores currently to 10,000 crores. They're also expecting the export share to rise from 29% to 50%, which also aids the margins for the company. So overall, it's a very bullish outlook coming in from the management, and resultantly, the stock is up in trade.
Okay, all right. Thanks a lot for that, Vamakshi. Actually, at the high point of the day, tells you how the street has read this very, very positively. Prakash, your view at around $750?
So if you have a horizon to wait till 2030, Nigel, when the company is very clearly articulated the vision to triple its revenue and at very decent margins. Remember, this growth in revenue is not going to come at the same margins, which and that's been an issue with this company. And you know what I like about this new announcement that they made? They have finally accepted the fact that they'll have to diversify into newer geographies as well to service the growing market. So, for example, the CBM market, the compressed biogas market, that is CBG market, is developing so fast in the south. And you have unlisted players like GPS and all, which are going ahead and expanding so much. There's no reason why Praj will not be able to get a piece of that build up. So I think the fact that they have decided to allocate capital and set up a new unit which services a newer geography and go beyond just ethanol, that's a very promising bet. We spoke about this, I don't know if you recall, but I think Surbi and I, we had a brief chat on Praj once when it was about 500 odd a few months back. So it's done so well. But I believe that it will continue to do well in the long term. And now there's more visibility of what it's likely to do after this capital allocation we made. So but then of course a PE multiple of 44, 45 trailing basis, and on a PEG basis probably it could be about 33 is something which you can live with. But yes, you will have to be ready to keep it for a longer term to actually reap the benefits of what's happening.
I remember the conversation on Praj. I remember the one on M&M. And I also remember the one on Nalco. That was the Diwali Muhurat day. And yesterday, Nigel was talking about, aluminum shortage and how intrinsically there's positivity there. But apart from all the geopolitical factors.
No, actually, to be fair, Nigel was talking about it before also.
Oh, Nigel was talking about it before. That's true.
I'll tell you what. Actually, what happened was we had the management, Mr. Patra, who joined us. And he's retired now. It was his last interview before he gave up the reins at Nalco. And he clearly told it out, because there are various ways of tracking the alumina prices, and he spelled it out. There's a shortage now, and there will be a shortage. And I think the stock was 210 or 215 at that point of time. When the management says that it's going to be at that kind of, surge, what you're seeing. And then global majors as well, irrespective of how their numbers were, all of them had one common point, that alumina is in shortage. Only one way to play it, that is Nalco. And obviously, Prakash told us on Diwali day as well, rocket time, it's a rocket.
Okay, all right. So lots of investment ideas and calls there. But Prakash, let me ask you about a sector that's kind of down in the dumps right now, consumer. And the reason I ask this question is that they say buy great businesses when the going is not good, etc., etc. These are companies flush with cash. They have no problem, no corporate governance issues, marquee names, high pedigree, all of that. But there's no growth. Would you stick your neck out here and buy anything?
So, I know it's a tough one, but given the fact that there are some plays where you could get into quasi-consumer names and not just necessarily pure FMCG conventional plays, and I'm referring to ITC, for example. Now, there is some very clear upside from the hotel business that's kind of getting woven in or is yet to get woven in, but has the potential to be brought in. So the consumer business is doing fairly okay. I'm not saying it's roaring in terms of growth and volumes and pricing and all, but it's at least much easier to sustain that kind of a tepid growth as compared to some of the other majors who could get a knock, while the hotel business kind of gives you that upside potential in the next 6 months or so. So I would, if I had to allocate money to FMCG, it could be an ITC at this point in time. Apart from that, the Britannias and Nestle's of the world would probably have to wait for a bit longer.
Prakash, any thoughts on Castrol? I mean, I was just noticing it was one of those fancy names which actually it was not a fancy name. It became fancy for a brief while, went up to about almost 300. Then it fell from 300 to about 185. It's coming up a little bit, 5-6%. But any thoughts? Do you own it? Have you looked at it?
Oh, we did. Try to understand this. And I know what you're referring to, Prashant. This was this rara days of data centers getting to use lubricants to cool themselves down and all. But the level of involvement or engagement with that area of work is very limited. It really doesn't impact the company. What's working for the company is a lot of new, potentially new products that it's launching, which could help it de-risk from the ICE market. Which is where the stock has not done well. And they are in a very comfortable cash position. You look at how they've been utilizing it to just pay off dividends. So at some point, my sense is there is a consolidation that will happen in this industry. And once that happens, you'll probably be left with just 2 or 3 big names. There are already very few names, but then these names will get bigger, and that's the upside in cash flow. But apart from that, I don't think organically there's anything which really kind of gets very exciting from a price volume action at this levels.
Okay, all right. Prakash, we'll leave it there. Thank you very much for joining us. Have a good weekend. We'll catch up again next week. Thank you. All right, we'll take a quick commercial break here. We're going to come back. Market's up 520 points, so it's a solid going, 23,860 plus. We have Aman Chauhan from Abacus Asset Management on the other side. Stay tuned.
Well, the market's at the high point of the day. We're gunning for the 24,000 odd mark. And I'll tell you what, India's picked up the 6th wicket. There was an appeal out there, but our boys have gone in there and knocked off another Australian batsman. So, I think by stumps today, India will actually be in a dominant position, getting bowled out for 150 runs and still being in a dominant position. I mean, we have to flash the Nifty and the Nifty bank, but feeling good, guys. Market's at the high point of the day. India's doing well as well.
Okay. All right. All right. Well, Aman Chauhan is now with us. He's fund manager at Abacus Asset Managers. Aman, good to have you with us here. Good afternoon. Thanks very much. Markets are, after a long time, showing some green across the board. So the question simply is the bulk of the fall behind us? And are we now... I mean, I know it's just one day. It's tough to say and it's going to be tricky and all of that. But are we starting maybe the process of repair? It could be slow. Today it's fast and furious, but are we starting the process of repair from here on? What's your sense?
Very difficult to say. Today seems more like a bounce back. We have seen a sharp fall and more of short covering that has come in today. Plus, there could be some buying also because we have seen very sharp cut in the prices. But with just Maharashtra elections, the outcome just next day, and with the global uncertainty still there, I'm not sure whether we can call it that the bulk of the fall is behind us.
Hi, Aman. Aman, we'll get to stock sectors that you like, but what about what about the clients? How are they behaving? Money is coming in. Have you all deployed almost all the money you all have, or are you all sitting on some cash? Because I think the last time around you had indicated that you were sitting on some cushion. So have you all deployed, or are you still sitting on that cushion?
Money is still coming in, though the flow has reduced a bit over the last 2 months or so, but it's still positive. And we would be having, say, high single-digit cash. It's not, cash is yet to be deployed. It's not that we are taking a cash call based on the market. We don't do that. It's more of incremental money that has come in, waiting to get deployed.
So, hi Aman, great to have you on. I was going through your note, the latest fact sheet November, and the commentary there, where I guess you folks still feel that despite the correction, valuations in some pockets are still a little expensive. But I think you still like the industrials theme, you like select financials. So just run us through the thought process right now. And within industrials, what are the niche areas that you would be comfortable buying now, even in this volatile market?
So what has happened in this market is stocks which have done very well, where valuations are north of 50p. Now they've corrected and they are now maybe 35, 40p. Still high for an entry P, right? So 30, 35p on the absolute number might still be justified, but not to enter. So that's what we are waiting for. It's something that we like when it's still corrected, but not corrected enough for us to look at it. So maybe a 20, 25p would be more appropriate to get into. And that is what we mentioned in our newsletter also, that yes, there has been a correction, but not enough to justify some of the pockets where we feel that stocks are good, but the valuations are not. On the industrials front, we like cap goods, we like engineering companies, we have decent exposure in them. We are also increasing our exposure to EPC companies, both civil as well as industrial infra companies. So that's broadly where bulk of our interest lies in that sector.
Aman, as many who we've spoken with over the last, since the election in the US, generally the view has been that 25 will be a little tricky for emerging markets broadly. So it's not going to be as easy. And the backdrop is, of course, very strong returns over the last couple of years for mid and small caps here in India. Do you think broadly, even if markets were to come back, I mean, the same sectors which have done well will return, or there will be some rotation? I mean, banks and financials, for example, people have been talking about for a long time. NBFCs is another space which has been beaten down, out of shape. Of course, with a lot of regulatory action, etc. What's your sense?
Definitely there will be sector rotations. Sector that will continue to deliver earnings growth will continue to perform, right? So wherever we see maximum correction is where sectors where there has been earnings disappointment or where earnings growth has not picked up. So the narrative in the market right now is monsoons have been good, rural demand has been soft, but now it's started to pick up. If that narrative holds true, then next 12 months, rural dependent stocks or sectors will do well. If dollar has to appreciate because of Trump, then obviously IT and pharma will do well. So these are the sectors that have not been in the limelight in the recent past. So if what the consensus view is, if that is to happen, then some of these sectors will do well at the expense of, say, PSU, which was the best performing sector over the last 12 months, or say a defense sector.
Aman, which is the Trump trade? I've been hearing so much about it. People say he's going to lay pipes. Some people are talking about the Bitcoin, and Bitcoin clearly has done 30-35%, just in the last 25 days or so. Then there's tech. So which is the actual Trump trade? Everything seems to be running according to Trump.
For us, the obvious Trump trade would be that the dependence on China, they would like to reduce it, and that throws up export opportunities for countries like India. So that's what, for us, what the trade is, that sectors where India can increase its exports, increase its global market share, and that will get accelerated because of Trump, because he'll put in some duties on China, he'll put in some duties on some other countries. So that is something which is interesting. Any Indian companies which have manufacturing facilities in the US or in that region also stands to benefit, because the way we are doing it in India, that we want to reduce our import dependence and be self-reliant, the US also would like to do that. So anybody having a manufacturing there, it will tend to benefit. So for us, that's what it is. Dollar will appreciate, there will be duties. This is all which is known. The details of that will determine which specific sector will do it. But the broader theme remains this, that Trump would like to see more of manufacturing, more of import dependence, reducing in US, and that's what the we can say the big picture trade for Trump is.
We are sounding quite excited, but that dollar index is not stopping. Now it's at around 107.2, and if in case you get a positive outcome from the state elections that the street is going into this weekend, that the BJP is going to come out on top, I think bulk of that state election news could be factored in at around 24,000 odd. And the dollar index needs to cool off to see further follow-through buying from here on as well. So, it's been a good session, but carrying positions will be a little tricky.
But look at it. I mean, the market is
That's
up.
the rocket.
The Nifty is up 600 points.
Yes.
Let's just have the Nifty up. It's actually from the time that we started. We started at 230. I'll tell you where we were at. We were at 23,850. We've added 100 points since that point, since 230, since when we started. So, this is quite incredible. So we basically were trading with a 2% gain, and that is about 2.5% coming through right now. So the institutional flow numbers later today will be very interesting because FIs were short big time. Is it just largely all of that getting covered, and is there some cash buying impetus as well? That'll tell us, and that'll be interesting. In that sense. Anything else, Aman, that you're kind of looking at, interested in, beaten down names, sectors where you're looking for opportunities?
Financial results, something that we're still very excited upon. More of private banks versus PSU banks. And within that, the larger private banks is something that is looking very exciting. Chemicals also as a sector where, though the recovery is delayed, but there are clear signs of bottoming out. So that is also something which is interesting. This can also be a good export opportunity for us. If China's exports were to reduce, then countries like India tend to benefit on the chemicals front. So these two sectors are something that are looking interesting to us, where we are working towards getting new ideas, getting something where we can deploy further capital.
Aman, also in most of your strategies, commodities find a reasonably big positioning, right? Most of the strategies are either 8 to 10%, some of them, in terms of contribution from commodities. So what part of it are you bullish on? Is it, metals? Is it oil and gas? Something else? Just take us through the thought process there.
So metals would be high single-digit exposure for us across our strategies. It is predominantly ferrous metals, and there's no oil and gas in that. And say we like stainless steel as a sector. We have an aluminium company in our portfolio. We have ferrous steel also in our portfolio. So it's predominantly towards the metal basket than oil and gas.
Steel, just to sort of take up a question again, because Nigel's been telling us about this whole, business of too much of steel in China, and they're going out and dumping in all markets. And over here, obviously, steel makers are crying out for protection. So, how do you see this? Irrespective, do you see better spreads ahead? Why the bullish call on steel?
So the bullish call on steel is that the way there's stimulus happening in China, there is a fairly high chance that the prices of metals will go up. So we understand there's overcapacity in China, and that is the case with not just metal, with most of the other products also. But they would also like to sustain a higher price so that even at underutilized capacity, they can make some money, right? Instead of burning cash. So that's broadly what the call is, that the way China is focusing its economy, they would also like volumes to pick up, if not at least profitability to pick up for the sector. And that's where we feel that the commodity prices can further move up predominantly based on the moves by China.
The ferrous space, it'll be what, the long guys or the flat guys? I mean, which one is it? And you mentioned an aluminium player. Are you also playing the ferrochrome theme?
Not ferrochrome. So we have the largest metals company in our portfolio. We have the largest stainless steel company in our portfolio. We have some normal steel companies also in our portfolio. It's a combination of these, but not mineral companies or ferrous companies.
Okay, and the large metal conglomerate is the one that's going through restructuring, is going through a corporate action in the coming months. You'll have that one as well?
Yeah, so we have the larger metal companies or commodity companies in the portfolio.
Okay, all right, Aman, always good speaking to you. Well, before we let you go, you know, the other big sector that's got a lot of attention has been the likes of Zomato, Swiggy, Zepto. You know, clearly there is, you know, all of us have been using all of these apps and it's making life much better. We don't mind paying the little more to have some comfort. Your view on this theme, and have you played it?
We like these companies, we like the business. It's something which is sustainable. It is something which is high growth, which is going to go on. But the valuation is something that is still not comforting to us. So it's not part of the portfolio. We continue to like them, but yet to own them.
All right, Aman, we leave it there. Thank you very much for joining us. Appreciate you taking out the time and being with us here. Have a good weekend. Actually, you know, we were talking about the quick commerce players, and Zepto is, of course, the one which has raised $350 million in what is the largest 100% domestic fundraise for a private startup in Indian history. The quick commerce delivery platform co-founder Adit Palicha spoke with my colleague Shireen Ban on the business and why quick commerce should be celebrated. Listen in.
I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. Like, I mean, it's you know, huge kudos to what Harsha and the team have pulled off, and I think it's great for the ecosystem. I mean, I think we should, one of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce, and Swiggy's IPO. I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say. It's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world, and it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who's able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
Have you been able to convince the government, though?
Well, I think I think the government is progressive. They support, value creation and job creation at scale, right? And they've been supportive so far. And we are, honestly in a position where we think of them as a partner. We're always open to feedback. And I mentioned this last time as well to you, right? That even with, let's say, gig workers, right? We are, honest to God, good faith, open to feedback and dialogue on how we can improve. Whether it's with gig workers, can we do more? Today we give insurance, right? 1 lakh cover plus 10 lakhs of term insurance for free. Whether it's with, food compliance across the board. So I think they've been helpful. But the last thing I'll say is, next time we're talking to foreigners, next time there's a foreign leader in this country, we should say, hey, not only do we have UPI, Indian innovation there, But in India, you can tap a button and your daily essentials will come to you in 10 minutes. That's amazing.
So you're saying
That's-
quick commerce is like the UPI moment for India?
No, it's world-class infrastructure built in India with Indian technology. And it's making real people, ordinary people, their lives easier every day, and it's improving productivity and the quality of life for tens of millions of people. By Indians. It's not some rip-off of, some American model or some, Chinese model. It is like only in India you get this stuff, which is awesome. I love it.
Made in India
Right.
and made for India for now.
Absolutely. No, I mean, we are going to be in India for these next couple of decades, so.
Welcome back. It looks like the Bulls want to go with a flourish. India's doing well as well in the test match. 7 wickets are down as we speak. So both going, step by step together. The Bulls charging ahead. The bowlers as well doing well for India. And I'll tell you what, Adani Enterprises, just pull up the intraday chart of this one. That stock, in fact, from the lows of the day, it's seen a massive recovery. And Adani Ports as well. So both of them should come up for you on the screen. But the reason that the markets are holding strong is because the pillars of the market are doing well. What are they? The Nifty Bank is moving towards that 20 DMA mark that we are talking about. It defended the 200 DMA yesterday. Now it's moved very swiftly to around the 20 DMA. So it's around 100 points away from there. Tech is up nearly around 2.5%, which is great. And the other relative underperformer of the recent past have been the Reliance stock. and that's up 3.5%. I think bulk of the contribution, bulk of today's gains is because of big boy Reliance Industries, which is trying to find its form, up 3.5%. Mitesh is back with us. Mitesh, what are the trading calls you have for us? We're on the verge of moving towards 24,000. Wow, who would have thought?
So, Nigel, I think one, I have revised the upside possibility to about 24,250. And while, the market is under no obligation to possibly follow what we recommend, but I think it does look like that this bounce back still has strength. So while there could be volatility with the numbers coming out, the election numbers coming out tomorrow, I think broadly, the short-term texture has changed from sell-on rallies to buy-on declines. I think that's the positive thing which has happened, the way the charts are shaping up. And on the stock side, I have a BTST on Coal India with a stop at about 410 for targets of around 420, 421. And the other one is a BTST, which I would take on Exide if it crosses 425, 426. So buy above 426, keep a 3-4 point kind of a stop loss, look for a 435 as a target.
Okay, all right, got that, Mitesh. Thank you very much for the trading calls today and through the week. You have a good weekend, and we will see you again soon. Let's move on. One more stock that's been a really strong pillar for the market today is actually Reliance Industries. It's seen a steady 3% up move throughout the day. It's retaining a bulk of those gains as well. And it's after a long time that Reliance is seeing a good day. A couple of positive brokerage notes came in. JP Morgan and Morgan Stanley are sounding more upbeat on the stock. Let's go across to Sudarshan to figure out why. Sudarshan, what's the rationale?
So before I go to those two notes, talking about the stock move, today's stock move, stock is up more than almost 4% and is contributing nearly 70 points to Nifty's gains, and it's set to post biggest single day gain in nearly 5 months. Now coming to those two notes, JP Morgan and Morgan Stanley both have overweight call in the stock. JP Morgan has a target price of $1,468 per share and Morgan Stanley has a target of $1,662 per share, implying upside up to 30% from current levels. So what does JP Morgan say? It says one of the drivers of recent underperformance has been weak refining margin, and as per JP Morgan, that has now started reversing. Another reason as per JP Morgan is poor retail top-line growth is difficult to anticipate, but expectations have now compressed, and post the stock correction, implied valuations for the retail businesses are 25 times FY26 estimated EBITDA, and now the valuations are below historical levels, and it's below peer retailers as well. And as far as talking about the modest near-term catalyst, one, they are saying that start of the solar panel plants also can be the near-term catalyst too. Morgan Stanley says, like JP Morgan, it says refining margins are starting to recover after 2 tough quarters, and free cash flow engine should pick up pace as 0.6 million barrel per day of refining capacity shuts in 2025 globally. So considering all these factors, both JP Morgan and Morgan Stanley have positive outlook on Reliance Industries.
You know, Sudarshan, before you started this update, you told us just, before that, I want to tell you something. I thought you were going to give me an analysis on the match as well. I'm wondering whether, do you think that we can knock them off today? I think we have still 10 overs. Do you think India can knock off Australia before the end of today?
So we still have almost 15 overs to go, and I think it won't be that tough to take 3 wickets.
Amazing. I love that. That's why I went in with 10. I was thinking of going with 12, but I know Sud will have the exact number, so 15. Let's hope, Sud, chuck the India. Should we?
Okay, all right, guys. Yes, the cricketing action is on, but for the time being, coming back to a couple of stocks and companies in focus. The next one on our radar is actually matrimony.com. Now, Matrimony is looking to matching the right candidate with the right job as well. The company has made a foray into the online job search market with its website, manyjobs.com. Our colleague Jude Sanis actually caught up with the company's CEO, Murugavel Janakiraman, to understand how this new business will play out, how it will contribute to the company's P&L, and what's the reason behind getting into it in the first place.
I don't know whether you recall or not, we had another job portal a long time back, okay, which was shut down. Both Lehman Brothers crisis, we had to focus on only few verticals. That point we let go of many verticals. One of the vertical was job vertical. This time we have not launched yet another job portal because the India dynamics have changed. The matrimony.com is almost 2 decades in the matchmaking space. We understand the platform business very well. So we saw an opportunity in the grey collar job portion. We have not launched yet another job portal. So what is many jobs that you have launched is an exclusive job portal for the grey collar workforce, which constitutes almost 45% of the workforce in India. You look at the way that the dynamics are getting changed in India, 20 years ago, things were different. The lack of job openings. Today is not the case. Today, a lot of jobs are available. The challenge is that, matching the exclusive portal to bridge the gap of the grey collar job portal with something where we see an opportunity.
Okay.
Whether obviously Naukri is there, other job portals are there. There are job portal for all the job openings. So we thought there's an opportunity to address the exclusive, the frontline and entry-level job openings. That's where the many jobs attempt to do.
Right. So when you say grey collar jobs, you're specifically referring to frontline jobs, entry-level jobs.
Yeah.
If you could just elaborate on exactly what kind of demographic you are looking at in terms of job searchers and how this will essentially be a differentiator for you, I would assume.
Yeah. So many jobs is an exclusive job portal for fresh, entry-level and the freshers. That's what this attempt to do. So what is that entry level and the frontline job means? Like you're talking to BPOs, customer service, sales, retail jobs, healthcare jobs. That's where we see that a good opportunity.
Welcome back. Well, a few stocks in the broader markets as well are doing well. So actually the Midcap Index today has done a relative underperformance, but you have Jubilant Food that's at the high point of the day. NCC as well has bounced back. So I think a couple of these stocks that were Astra up 3.5%. Now they've gone up close to around 4.5% or thereabouts. Let's get in Hemang Jani, who joins us on the show. Hi, Hemang. We have discussed quite a few stocks, but I wanted your view on Supriya Life. I recall the stock had a fantastic listing. Everyone was talking a big opportunity. It, went up. And from the highs, the stock halved actually. It went below 300 rupees. But of late, they've been getting their act together. As we speak, Supriya Life is up more than 10%. What's your view at around this 800 levels?
So good afternoon, Nigel. Thanks for having me. I think CDMO as a theme is catching up, more so, around this US elections and Trump's victory. And if you look at this company, they are doing pretty well. And last quarter, they have, in the con call given a guidance of about 22-23% in terms of revenue growth and about 39% in terms of margins. And if things play out well in US, the CDMO space, then there can be some positive surprise in terms of the order inflow. So I think you have a bunch of companies in the space, Laurus, DVs, and in the small cap category, this one fits in. So we do have a positive view. We think that this is a good theme, and we have a price target of about 22% upside from current levels.
Okay, so still looking at more upsides on Laurus. Got that, Hemang. By the way, the market's continuing to move higher, 23,900. I mean, it's turned out to be a really, really good afternoon. And look at the way the large cap stocks are moving. SBI is up 4.5%. TCS is up over 4%. Titan is up over 4%. It'll be really interesting to note the FPI number today. Let's see. Finally, we've moved from the sell to the buy side, or maybe at least the selling has come down. It'll be an interesting trend to track for sure. Big moves coming through on some of these large caps. Hemang, let's actually take up SBI. The stock reacted quite negatively yesterday, knee-jerk reaction to a lot of the Adani headlines. But in the large cap banking space, how would you rate and rank it? I mean, would you go in for an SBI or say an HDFC, ICICI? What's the order?
SBI post numbers had corrected sharply yesterday also when this Adani news came in. There was a knee-jerk reaction, but I think when you look at the numbers and the performance, not just this quarter but last about 3 or 4 quarters, it's been pretty steady mover. More so the guidance has been very good, about 14-15% kind of a loan growth. And most of the parameters, it's ticking the right boxes. So SBI will be clearly the top of the list, and of course, ICICI Bank and Axis both I think delivered a good set of numbers. And more so, if you have seen, banking as a sector is kind of outperforming for the last, let's say, about 2 months or so, and for the right reasons. So I would certainly go with them. In the smaller bank, I think Federal Bank really stood out for us. So I think these are some of the names that we go with.
Okay, all right. Any view on Jubilant FoodWorks?
So Jubilant, Nigel, the numbers were pretty decent. More part of that was because of the delivery cost waiver, but there is a possibility of some strategic investor coming in, and which is what is actually creating some price action in the stock. And within the consumption basket, when most companies were struggling, Jubilant actually delivered good set of numbers.
Okay, all right, got it. Hemang, stay on. We'll take some final thoughts and stock ideas with you. In the meantime, another set of views coming in on the market. Hear out what Gautam Duggar of Motilal Oswal had to say on the Q2 earnings season that wrapped up the trajectory ahead and his specific calls on areas like cement as well as Zomato.
If you look at the next 5 or 10 years, I think it's quite probable that at an industry level itself, we might clock a growth rate CAGR of 20% over 10 years. Of course, today 20% for this segment may look less because they are growing at 40-50%. But if you stretch that out over a 10-year period, at a top line basis for the industry as a whole put together, 20% is a very good number. And as of now, there are only 2 or 3 players with size. So definitely there are going to be a lot of winners in the spaces. Difficult to say who will be the biggest winner. So it makes sense, in our view at least, to put a bet on 2-3 names. As far as our own model portfolio is concerned, we've been holding Zomato and continue to stay positive on it. No, we don't like cement as a space. We don't have any exposure to cement stocks in the model portfolio. The numbers are very bad, actually. And I think the numbers are going to look weak over the next 2 quarters, too. This was incidentally the 5th consecutive quarter of a double-digit profit decline. As we move forward, March typically is the best quarter for the cement sector. We will see how things pan out by then. Definitely not at the moment. We don't have any exposure to cement stock. We are actually playing industrials theme through capital goods. We are playing industrials theme through real estate and all.
Okay, all right. That was Gautam. Hemang, finally, tossing it to you as the week wraps up. Buying ideas, anything fresh?
I think real estate as a pack should do well. I think DLF and Prestige are the two names that we like. Numbers were very good. Concall's management was sounding pretty good, both on the residential side as well as DLF on the lease rental side. And Prestige also had corrected quite a bit despite decent set of numbers. So I think this being a high beta sector, we think that the risk reward at current level is extremely good.
All right, you want to give us any one pick? Hemang, we discussed Supriya, we've discussed the real estate theme. Open-ended question, that one stock that you think it's corrected or valuations are decent and it has a good runway, if you want to discuss with us.
Well, I think neither Protein, which is having that Protein e-governance, which is having this FPO, that looks to be a very interesting company to us, given its positioning in the entire ecosystem around the government e-infra. So I think at a steep discount of almost about 15 to 18%, this looks like a very good theme for medium to long term kind of an investor. And, I think even from current up today, it is down about 7-8%. But my sense is that around, 1600 or thereabouts is a compelling buy.
Okay, all right. Hemang, thanks a lot for joining in. It's that sort of a day when the markets are ending up and India's action as well against Australia, that as well has wound up. Going home, Australia going home at around 67 for 7. But it was a good day for the markets. You had all the big names that were firing. Just one stock from the Nifty pack that ended in the red, which was Bajaj Auto. That was mildly down close on 0.4%. But SBI, Titan, Bajaj Finance, TCS, ITC, all of them blazing all cylinders, and big boy Reliance Industries as well. Most of the contribution in today's trading session on the upside came in from Reliance Industries that finally found its form. But from the broader markets as well, there were quite a few stocks that move around. MRPL was up close to 9%. Swan Energy was up close to around 12%. Castrol came back into the buy list. Remember, it went all the way to around 260, then it corrected big time. Today as well, that stock was up.